Welcome back, traders. It's Wednesday, January 8th, and the upcoming sessions might be quite interesting as the FOMC meeting minutes and jobs reports out of the US and Canada might add extra volatility in major FX pairs such as euro dollar, dollar yen, and dollar loonie. So at this video, I'll briefly explain my technical outlook on those pairs, starting first with euro dollar and the FOMC meeting minutes, which will be out later today. The previous policy meeting suggested that the Fed may cut interest rates only once, and market expectations are currently wondering when the next rate cut will take place. Projections provide a low probability for a January rate cut, so the minutes may provide some insight about when the next rate cut could take place. So if we get additional information, euro dollar may face volatility. We saw the price failing to close above the 20-day moving average earlier this week. That increased the negative risks in the market, shifting attention to the 1.02 number, where the lower boundary of this bearish channel over here is located. So if that area proves fragile and the price continues to trend to the downside, likely crossing below 1.0155 as well, then all the attention will turn to the 1.01 number, where this former ascending trend line from March is placed. Additional declines from there could then bring the case of parity under examination. If we look at the technical indicators, well, it seems that the market is already trading near oversold levels. The RSI is heading towards its 30 oversold mark, and the stochastic oscillator is slowing down. So that suggests that selling pressures may fade soon. So if we see a rebound, then the 1.04 number could come back into view. I would like to see clear close above this region to target higher levels, in particular the 1.05, the 1.0540 region, where the 50-day moving average is placed. Then additional gains will be needed to upgrade the outlook, and particularly move above 1.06 number would signal a bullish trend reversal, bringing the 1.0670 and 1.07 number constraining zone back into view. Now looking at dollar yen and the next and Friday's non-farm payrolls report, well, the jobs data will be the last release of 2024, and expectations are for a slowdown. The unemployment rate and average hourly earnings could remain steady. So if the report comes overall weaker than expected, suggesting a slowdown in the US labor market, that could add some pressure on the US dollar, which is currently trading at near 6-month highs against the Japanese yen at 158.54. That increases the case of FX intervention from Bank of Japan, as the price is trading at such high levels and below the 30-year high of 161.94 registered back in July. So but this is an area that the Bank of Japan is not comfortable with, and FX intervention could be possible. However, if the US jobs report surprises to the downside, that could add weakness to the US dollar, and probably bring the 157.30 number, where this short-term support trend line is located, under examination. Then the 20-day exponential moving average of 156.15, which previously supported the market, that could also keep traders busy. If it proves fragile, if the price crosses below that line, then the next region to watch could be the 154.85 zone. There is a former resistance trend line passing through this area, and the 50-day EMA is also here, so that could act as support ahead of the 153.30 constraining zone. If the sell-off continues from here, then the 200 EMA could come next into view. Now, if the data surprise to the upside, well, we could see dollar yen rising up to 160.20. That's where this broken support trend line is located. Higher than that, we could see another aggressive rally towards 162.55, and perhaps the 163.85 territory could also come under the spotlight in case of a more aggressive increase, as this is where this former resistance line is placed. If we look at the technical indicators, it seems that the market is near overbought territory, so I would rule out a downside correction. But if the price manages to cross above this resistance line, 158.63, then probably we will see a bullish continuation. And finally, looking at dollar loonie, well, the Canadian jobs report could be important to watch, as forecasts suggest further increase in the unemployment rate. Particularly, the unemployment rate could hit a new 3-year high at 6.9%, and projections also suggest the slowdown in jobs growth. So another bleak report out of Canada could help dollar loonie to continue higher. We can see that the price found support around the 20-day exponential moving average. So if that rise continues, and particularly if it surpasses the 4.5-year high of 1.4465 and then break the 1.45 number, the next resistance could come around 1.4585, and higher than that, I would also pay attention, all attention will turn to the pandemic and 2016 highs registered between 1.4665 and 1.4689. Well, from a technical perspective, there are signs of weakness. If you look at the RSI and the MACD, we can see that the indicators have been trending to the downside and moving against the price action. So it seems that there are signs of weakness. However, for the sellers to come back into play, the price should break below 1.4315 and then cross, more importantly, below the support trend line at 1.4270 in order to meet the 23.6% Fibonacci retracement of this up leg at 1.4218. Lower than that, the 50-day EMA at 1.4155, and then the 1.41 number could be the next important levels to watch in this market. So that's everything I wanted to share with you guys. Thank you for watching, and wish you have a great training session.